markets have been extremely volatile both globally as well as in India. This volatility comes from the fact that central banks across the world have been taking major steps towards taking up the interest rates and also withdrawing liquidity which was in the market. Markets are jittery and investors are nervous. There is a generally risk off mood which has set in. However, one has to remember that this was on the cards, and to an extent this action was factored in by analysts and economists, considering the fact that inflation was touching newer highs pretty much across the world. We also have to remember that the geopolitical conditions haven't yet improved and the pressure on commodity prices continues. We probably are in a commodity super cycle where commodity prices are generally pushing up cost of production, and the margin for corporates across the world have been under pressure. Indian corporates by and large have declared decent numbers which are more or less in line with expectations. There has been pressure on margins, but they have pretty well handled the pressure through multiple measures of cost reduction and taking appropriate price hikes. Having said that, I think we have to brace for this volatility in the current fiscal FY23. We will not have the kind of ride we had seen in calendar year 21, and I think it's better to be extremely cautious in the market. Having said that, I think investors need to look for opportunities of making money, and there are significant pockets of opportunities still around us. We believe that metals is one sector where there are significant opportunities, and one can look at aluminium, one can look at steel companies, even domestic steel companies, in spite of having reached newer highs, do look good at current levels. Tata Steel came with results were pretty impressive, and even at current level that can be picked up. We are also bullish on BFSI. I think last 2 years have been terrible for BFSI. There has been significant correction, asset quality was in doubt, and we had seen bloodbath in this space. Right now, the results of BFSI for the Q4 are coming out, and we find significant asset quality improvement. Also, the interest rate rising does help efficient BFSI companies, and this should help a lot of leading banks and financial companies. We like ICICI Bank, we like SBI and HDFC Bank. Investors will do well to pick up these stocks at current depressed levels for 1 year hold. The other sector which we like is pharma. I think companies having business in India, companies focusing on APIs should do well. Also, the injectable space is becoming hot. So we have to focus on these companies which are in these areas. One should avoid companies which have a large business in US, since the pricing pressure in US is genuine and is not going to go away in a hurry. We also like cement. I think we have seen significant cost pressures there, but the companies have taken price hike, and supply demand situation warrants that they will have a good ride for the next 1.5 years. The focus on infrastructure by government and housing infrastructure creation will help cement companies. We believe that companies like Ultratech Cement can be looked at current level for 1 year hold. Overall, we advise investors to be cautious and extremely stock specific in their activity in the market. Thank you.